What's going on, everybody? It's another week of What the F Happened. I'm joined with my partner in crime, Mr. Snaggy, and all of you on Instagram, on TikTok, on Facebook, and also coming in from YouTube. Holy crap. It's almost like every week we do this, the news just gives us more and more. So just yesterday, one of the things I want to bring up is the markets jumped 750 points. Should we cheer? Should we rah-rah? Should we just think, oh, it's okay? I saw some news articles being like, people cheer that the market's finally coming back. Are you out of your mind? The markets aren't back. This is a trap. If you're buying in thinking that it's okay, you are making a massive, massive mistake. You're obviously not reading anything about what the institutions are saying, what the big banks that are actually telling you the truth are saying, and you're not listening to us. Because yesterday's little move up in the market was specifically and only speculation. That's it. Today, futures are down. So we're going to get into that. We're going to get into the $30 trillion national debt, the climbing inflation, and why inflation keeps going up, even though the Fed is doing its best to tame the beast. Stay with us, folks. We are going to be right back, and we are going to have a lot of fun on today's episode of What the F Happened. All right, we are back at it, folks. Thank you all for joining us for another week of What the F Happened. There's a lot that's happening, folks. Inflation, 9.1% and climbing, but it doesn't matter. What you're seeing is people getting revenge for not being able to go out, get on planes, travel, and be out there in the public. That's what's happening, folks. People are employed. People still have jobs, and unemployment numbers are still very low. I mean, we had the pandemic. Lots of people were out of work. Unemployment, numbers were through the roof, one of the highest in history ever. But then it opened back up, and demand was through the roof, and then everybody is employed, which means when you're employed in an inflationary period, you're probably making more money. Because there was a massive shortage. There still is a shortage of good workers, or there's just workers that don't correlate with the jobs that are available. But here's what happens. Everybody's making more money at their job. They're employed, and they're getting revenge for being locked up for almost 2 years during the pandemic when things were shut down. So they're out there getting what's getting and having a lot of fun and traveling and spending a lot of money, going out to restaurants because they haven't. So even though prices are up, gas is up a ton, people are still spending money. So when does the hammer drop? When does this whole thing come down? You're already seeing the cracks, folks. You're seeing the cracks in the entire system because you're seeing big institutions. You're seeing some banks. You're seeing lots of hedge funds. You're seeing a lot of financial service companies. You're seeing Wall Street firms. Heck, you're even seeing the famed FANG stocks all peeling back and laying people off, trimming the fat, if you will. And that's just the beginning. Because when this whole thing takes hold, I would say in the fall, maybe late third quarter, you're going to start seeing unemployment numbers slip. You're going to start seeing people getting laid off. You're going to stop seeing those incomes going up, and you're going to start seeing people really realize the trouble that they're in. And that trouble is going to come in the form of debt. Because a lot of people that are out there spending money, they can't afford to do this revenge summer. They're just putting it on credit cards because, hey, I'm employed. I can pay these bills. Let's go have a good time. I mean, folks, think about it. Like, I'm not trying to point this out. We're all in the same boat. I am. Stephen is. Stephen just got back from vacation. We all want to go out. But what we have to understand is if you study history and you look at any other period, there's really only one other period of time you can look at to kind of see where we're headed, because we're at the end of a long-term debt cycle, end of a short-term debt cycle, and end of a technology cycle. So if you just look at the patterns, this summer, Okay, we're in July 2022, mimics the summer of 1929. So if you go back to 1929, what was going on? All the same things that are happening now. You had people fully employed. You had people losing money in the stock market, but then the market was starting to come back because big banks were plowing money in. It wasn't the Fed putting money in, it was big banks. They had the cash, they had the control back then. They were dumping money and trying to prop up the markets, and it made everybody get a false sense of hope, just like right now. And then what happened? Well, how many of you know 1929? What happened right after 1929, the summer? That's right, the Great Depression. Folks, I'm not saying that's where we're going, but that's definitely where we could land. Stephen, what do you have to say about that?
Yeah, I mean, CNBC just came out with an article here recently. Credit card debt in the U.S. hits all-time high of $930 billion. Here's how you can start to tackle with a balanced transfer. So they're pitching a little bit, but that's the key right there. Record $930 billion. And just like you're saying, people had some savings, and I could pull up a savings chart as well. Savings are starting to drop, and credit debt is starting to increase. And we start to see this happening. Not good things follow, Chris.
Well, there's an interesting thing. I'm going to come over and give some credit to somebody here on TikTok. Slowpoke 305 said, nope, very happy, all bills paid. That's really smart. So Slowpoke's definitely not slow at what he's doing. Slowpoke's ahead of the game, because if your bills are paid and you don't have any debt, you're probably in a good place. But the second thing you got to look at is, how liquid are you? So just because your bills are paid, just because you're not in debt, those are the first most important things right now. Because going into a recessionary period, folks, if you look at any other period of time where there was a recession, the people that fail, the institutions that fail, and the businesses that fail are the ones that are highly leveraged in debt. So if you're not in debt, if all your credit cards get paid off every single month and you have low debt, I mean, forget about your mortgage, because we're really not focused on mortgages. And I guess we're not focused on student loans, because who knows what's going to happen with this administration. But the one thing that will crush you is bad debt. Bad debt will take you right down, because when your income slows or drops altogether, or you have to go on unemployment, you're not going to be able to carry those bad debts, and that will sink your ship. So Slowpoke.
On top of that, I was going to say, on top of that, Chris, with bad debt, like you don't realize a lot of times that you could be making great money in crypto. Maybe you're doing some day trading. Maybe you're doing some real estate. You're making 12, 15% returns, 20% returns. You think you're doing really good with your investments, but you're carrying this credit card balance over in this other hand that you kind of forget about. And that credit card company's charging 23, 27, 30% sometimes on these interest charges. So while you're making great returns, net spread, you're losing money to all this bad debt. So it's something that's often forgotten about when it comes to our finances, but something that's very important that we need to understand better.
I think that's critical. And Michelle 69 over here on TikTok said, we are in a worse case than the Great Depression. Now, folks, listen, I don't know Ann Michelle, but she's 100% right. If you look at fundamentals and economy and everything that was going on in 1929, the reason the whole thing went down was debt. Everybody was highly leveraged with margin. Okay, that was a big piece of it. But today, you've got a much worse situation. Like, if you compare 1929 to 2022, and you just look at fundamentals and you look at all the different things that are going on, we are way worse off. The only thing we've got is modern monetary theory economics, which is awful economic theory, but that's what they've got. They can print money. But they've already got a problem with printing money. And let me shed a little light, and this will play right into Ann Michelle, where we're worse off. Here's why we're worse off. When they printed 5.1 trillion, or we can take it back to 2008, like for sure said, go back to 2008, we've printed over almost $11 trillion since that time. So that we could just do the carry forward. You could focus on 5.1 trillion or 10. I mean, who's keeping track? A trillion here, a trillion there. Who cares? But you know where all that money landed? Well, some of you are thinking, well, it landed in our hands. We got stimulus checks. Some of you are thinking, well, businesses got PPPs and EIDL loans. And then some of it went into the different states for different programs to help people that were unemployed. Some of it went to bailout states that couldn't afford to maintain pension payments, or they couldn't afford unemployment. It all went out there, but I don't think anyone really, and I know I certainly can't comprehend it, I don't think any of us really realize how much money that is. And I read a white paper yesterday, and I'm going to be doing a whole video series on this because it scared the living shit out of me. Do you know where a lot of that money is? Sitting in bank reserves. You see, banks are in the business of lending, right? Banks take your deposits in. They want you to make deposits into the bank. They then loan those out and they make a spread. This is what we teach, become your own bank, because we can show you how to do exactly what banks do and make a spread the same way the big banks are making 400 to 1,300% more than you are. But here's the problem today. The Fed has made it so that when banks have extra money, okay, surplus reserves, excessive surplus, the banks don't have to lend that money out anymore. What the banks do is they just have the Fed hold that money and the Fed pays them an interest rate. Now, how much is that interest rate? Well, let's just keep things really simple. If the bank, and the average interest rate that the banks are paying you, me, Stephen, and all of us is about 0.001%. Now, if you're making more, consider yourself lucky. That's the average. I just read this. This is as of yesterday. How much money are banks making on the excessive money that they have in reserves? And where did the reserve money come from? $5.1 trillion. When they printed that money, a lot of that went into the banks to stimulate the economy so that the banks would lend it out. But the banks aren't lending it out, because lending it out involves a little bit of risk, where the banks don't have to take any risk. They can just give it to the Fed. And right now, with the Fed raising interest rates, you know how much banks are making on that surplus asset? 25 basis points, 0.25%. So let's just think about this. Let's call it trillions of dollars sitting in reserves at banks that they're supposed to be lending to you to stimulate the economy. But the Fed doesn't want the economy stimulated anymore, because we got this problem called inflation. If the banks lend more money out, we got an even bigger problem with inflation, because now there's more money in the system. All of you have access to more money because the banks are flushed with cash. So the Fed says, no, we don't want that money making it out into the system. So here's what we're going to do, banks. We're going to pay you a higher interest rate just to have us hold that money, so that you don't have to lend it out. So that when you get deposits, you don't have to rush out and lend that money. That way we can kind of control the money supply into the economy. We can make everybody else poor and we can get rich. And the banks are. Look at profits from banks. A lot of people, if you're paying attention to earnings, bank profits are coming in really strong. And it's not because banks are healthy. It's because they've got all this money that was printed. Your taxpayer or your tax dollars are going to pay back, but all this printed money sitting in their coffers, holding with the Fed, and they're making one hell of a spread. But you know who's not making money? And this is where you all should get really pissed off. You. How much is the bank? Because interest rates have gone up now 3 times. We're going to see the 4th increase. It could be a quarter, or it could be 3/4 of a point, or Stephen, I don't know, maybe we see a full percentage increase this next rate increase. Could happen. So all these rates are going up. Who's making money? Banks. Because they can charge more for the loans. They can charge more on the credit cards. They can charge more on the car loan, the boat loan. They can charge more on mortgages. And they are. But you know what else they're getting paid on? They're getting paid on that spread between what you earn on your bank, savings, checking, whatever. And I don't care if you're in a premier banking, you might be making maybe double what the rest are. It's still 0.001 versus 0.002. You're all losing. Where the bank's winning, because they're paying you the same amount, yet what are they doing? Making a bigger spread on money that you aren't even aware. Stephen's going to put an article up. Can you please can you just talk about that article real quick? Because Instagram and TikTok can't see that.
Yeah, no, I just on the market rates. You know, a lot of people, this is from Market Watch on CNBC. The Fed's next interest rate hike might be the biggest in decades. So they're asking, you know, some real estate pros what they think this will do to mortgage rates, because these rate increases affect everything in our lives, like you're saying right now. So word on the street is that the Federal Reserve may raise rates by 1% at their meeting next week on July 26th. So we'll see. We'll be watching that very closely, Chris.
Yeah. So folks, the big problem is the banks aren't paying you any more money for the deposits because they don't care if you give them any more deposits. They truly don't right now. They have enough cash. They don't need your cash. So they're not going to pay you any more money. But all the while, your expenses, everything's going up. So what's happening is people aren't keeping money sitting in banks where it's safe, which I don't think banks are safe at all. You know, if people are asking me, you know, well, what bank do you use? I use my own bank. As you can tell right from my shirt, be your own bank. I use my own bank. And you all know what that is, specially designed and engineered whole life plans. And then we use the infinite banking concept, the process to move the money. But that's not important for today. The average person keeps safe money in a bank. But but the bank's not paying them anything, but all their costs around them, everything's going up because of inflation. So they're fighting an uphill battle, and it's not just it's an unclimbable uphill battle. You can't win. Somebody over here on TikTok said 9.1% inflation doesn't mean depression with our economy. So this is Matthew Veritas, 411. It's correct. I never once said that the inflation is what's going to drive the depression. Matter of fact, the inflation will have nothing to do with the depression. What will have to do with the depression is investor sentiment. Okay. Debts will definitely have something to do with that. And the complete collapse of the stock market will have something to do with that. This is going to be a prolonged recession, which then, if you look, that will turn into a depression. So it's not depression or recession. It's a recession turns into a depression. That's all. Just look up the thing. So, I appreciate your comment. I just think you're taking it out of context. Inflation going up drives the Fed to take action. What is the Fed's action? Raise interest rates to make money more expensive so people spend less. Not working because people are still spending. Secondarily, unwind the balance sheet. Sell the bonds they're holding, $8.9 trillion in bonds, mortgage-backed securities and treasury bonds. Sell them into the open market, mature them into the open market. Why? It sucks liquidity out. Less money in the system means less people having access to money, which means slow everything down, which brings inflation down. So those are the two main actions the Fed's doing right now. Are they working yet? No, but it takes time. Look at 1980s. We were in hyperinflation. It took time for them to wrangle that in, but they did it at the expense of every citizen of this country because it led to an awful, awful recession. And that's where we're headed. So
what's interesting, Chris, is while the Fed is making all these moves to tamper down inflation, the United States government keeps pushing and pushing and pushing to spend trillions and trillions and trillions of more dollars through these various big, humongous multi-trillion-dollar spending bills. Luckily, there's some senators and we have a country where we can stop some of this stuff from happening, but pouring trillions and trillions of more spending on an already overly inflated bubble of a market and inflationary times, to me, just doesn't make any sense. So, we have this internal battle in this country too right now where we're trying to fix the problem, but we're also trying to continue to make it worse, which is just kind of odd at the same time. So just a lot of moving parts to it.
It really is. And someone on TikTok came in with a funny comment. They said, so let's just have a drink. You seem to be well stocked for a recession, depression. I hardly drink. The reason we have a bar here is because we do events here. So, this is my lounge in the basement of my house. We got a whole nother wing over here where we do events. But this is sort of where when we do events, we come in, we have cigars because we got a filtration system, and we have drinks with, the people that come for events. So it's well stocked, but I hardly drink any of that. I'm a beer guy.
And these are private events, like the event we're having, next weekend. This is at the corporate offices, and we rented out a new studio next door. So we have to be kind of special to get an invite to that basement.
Well, I only allow 4 people at a time, so it's a lot of people would call it a mastermind, but like here, so you can't really see it, but see this leather chair I'm sitting in. I've got another one, and then I've got a chair. There sits 4 people, and that is the event we do. It's called the program, but we're not here to talk about that. But just that's why we have lots of alcohol here. I hardly drink. I like an old fashioned from time to time. I haven't made one here yet, which is sad. I'm just never home. But great. Let's see. Pop one for Ukraine. So I'm not sure what that means. Pop one for Ukraine. Maybe pop a cap on a drink for Ukraine or something. The country is well off on its way. Okay, that's interesting. The country is well on its way to Venezuela. God, I hope you're wrong. I hope you're wrong. That one, I don't even want to go down that rabbit hole because that would be a really terrible situation. But folks, this country's, it's still the greatest country on earth. The dollar is still the reserve currency. The dollar is still the highest, most desired currency in the world. Make no two ways about that. And that's not changing soon. Will it change in the future? Yeah, right now we're going to have a clash of empires. You got the United States, which is the lead empire, if you want to call it an empire, like Ray Dalio does. And if any of you want to learn this stuff, just watch Ray Dalio's video on YouTube. It's, it's a phenomenal video and it explains all this. Or you can see right back here, Ray Dalio's book called The Big Debt Crisis on there. Not promoting Ray Dalio's book, but it's a phenomenal book, but it's like 700 pages. I haven't got through the whole damn thing. That right there will make me start drinking. But anyway, you just got to look at this stuff. You really got to understand, all right, where we're at. and just parallel it back to some other time in history. So a lot of people want to say it's 2008. Not really. Banks are well flushed with cash. They didn't make a lot of bad decisions. Maybe CMOs are a problem right now, but that's padded with all the money in their coffers. Banks are healthy. Okay, so you're not going to have a failure of banks, so to say. Some will fail. But really where you're going to have problems is you got the Fed against inflation, and we're at the end of a debt cycle. When you look at the debt in this country, Stephen, can you pull that up? We've got over $30 trillion in national debt. Over $7 trillion of that was printed with massive handouts and spending, unnecessarily, by my opinion. You guys might disagree with this, but totally unnecessary. And you're right, Carl Koenig, banks are definitely crooks. That's why we are the bank. That's why we teach you to become the bank, because banks are crooks. So Stephen, just talk a little bit about this, folks. This is where the rubber meets the road, whether or not it's too big of a number for you to really comprehend or really think about. But this is where the problem begins. When you look at cycles, the last long-term debt cycle ended in 1933. We are at the end of this long-term debt cycle now. Matter of fact, we're well on our way onto the other side, which you see the declines and everything. When this whole thing lets loose, which it already is starting to show the cracks, actually more than the cracks, like we've got craters, this is going to be a massive problem. What do you got, Stephen?
Yeah, I mean, these numbers are pretty obscene to try and understand, but yeah, I mean, the U.S. national debt is now over $30.5 trillion. When you look at United States unfunded liabilities, we're up over $170 trillion, I believe that is. $170 trillion. I mean, when we look at these figures, they're hard to comprehend. They're hard to kind of wrap your head around just how much $30.5 trillion is. You know what I mean? It's one of those things. And then you look at how much money we are, money creation. I don't even know what number that is. 837 billion maybe. And then 20 trillion in M2 money supply. So currency and credit derivatives, $607 trillion. I mean, the numbers are just fascinating.
It's nuts, folks. And you can all post. It's the usdebtclock.org. You guys can look at that and see where we're at. But that's really not the important stuff. But let's go into some other things that are in the news. Stephen, what's happening with insider trading? I mean, you would think by now it's been in the news. It's out there. Nancy Pelosi's constantly doing insider trading and making millions, if not tens of millions of dollars doing insider trading, which to us, just so you know, folks, and you saw Martha Stewart back many years ago, if you do insider trading, you go to jail. No, you don't pass go. You just go directly to jail. But if you're a politician, Nancy Pelosi, I guess it's fair game. You're just allowed to do this because you got all that insider information right there at your disposal. And I guess you're allowed to use it to make millions of dollars. So, hey, listen, what we always say, you want to become wealthy, you want to learn how to make a lot of money, just mimic what the wealthy do. Nancy Pelosi has insider information. Follow her trades. And there are ways to do this now. I'm not saying you should be playing in the stock market now, but if you wanted to, just follow her lead. What is she doing now?
Yeah, I mean, so this just came out, Nancy Pelosi's husband, Paul, bought 20,000 shares in a semiconductor company right before an expected Senate vote for that same company. So, the implication is she knows that this is going to pass. So they bought all the stocks knowing that once you dump $50 billion into this company, it's just going to shoot up. And just as quickly as those shares were purchased, the vote did happen yesterday, and of course it was passed. So the Senate advances more than $50 billion bill to boost U.S. semiconductor production. So within a week, I'm sure they made some nice little profits there.
I agree. I'll never understand TikTok, why there's so many haters on TikTok. It just blows my mind. One person saying I'm looking like I'm going to cry. I don't think so. I'm just looking into the camera. I don't feel like I'm going to cry. I'm not getting emotional. There's no need to cry. Actually, I'm pretty fucking excited right now because there's going to be a really big opportunity. But there's just all sorts of haters here. And then, everybody's like, stop. Your business is making money online. No shit, Sherlock. Imagine that. Stephen, imagine the fact that we actually go out and we make money online. Imagine that I put tens of thousands of dollars a month into YouTube and by YouTube. Oh, imagine that. It's kind of like imagining, that Santa Claus is real or the tooth fairy is real. Don't tell my daughter. But dude, why do people hate so much? I'll never understand it. It's really okay, man. It's really okay because you gotta tackle hate with love. The dude just needs a hug, man. Matthew just needs a hug. And man, we got hugs for you, buddy. Come on over. I'll give you a hug. You can even have a shot if you're really feeling that down in the dumps. But that's not going to get you out of this mess. It's not going to help you. It's not going to save you. It's not going to help your family. It's not going to put money back in your family. You changing the way you think from hate to optimism is going to change your life. And then taking action and mimicking what the wealthy do. But what else do we got in the news here?
Let me cheer you up real fast, since they said you're looking sad. You know, one of your favorite movies is Dumb and Dumber. And I know you're such a huge fan of our Canadian neighbors to the north and their leader, Trudeau. So let me just share one funny 15-second video with you right here.
Feel it, Harry? It's our big chance.
All right, that's all.
I know TikTok and Instagram couldn't really see what was going on there, but it's pretty hilarious. Oh wow.
So in other news, maybe talk about crypto for a minute, and then we can get into some real estate and whatnot.
Yeah.
But crypto. I bring up crypto because I scour the news every week to find different articles and things that we can talk about and learn about what's driving our money and the markets and everything. And I've just seen a big lack of articles and news stories on crypto lately. So, where did crypto go? Where did all the mouthpieces out there, pushing crypto and everything? Now, I will say crypto could be another little trap. Bitcoin has gone up to about 24,000 from the 20,000 range, which I kind of wanted to share real fast. And this kind of brings me back to what you opened up with, Chris, talking about how, that trap, we saw 750 point Dow day yesterday. Today we're down slightly. But if we look at, I talk to a lot of people on the phone, and I hear a lot of people that are getting their 401k statements, and they're telling me how their 401k is down 20% or it's lost, 30% in the last, since the beginning of the year and things like that. So I went and I looked and I was like, okay, so if I look at year to date, they definitely have lost money. And if you look at even the last 3 months, the Dow is definitely down, which, this correlates exactly with a 401k. One of the problems with the 401k is you don't have control of your money. So you can put it in the market or you can put it in the market. That's pretty much it. So you don't have a lot of options. So you got to play this game. You don't have any options with your 401k while you're actively at the job. But then I look at, okay, let's look at the last month. Okay, we've seen some gains. Let's look at the last week. Since we talked last Wednesday, we've seen some pretty nice gains over the last week. So what I'm worried about is people are starting to notice the losses and they're thinking now what to do. Do I sell? Do I stay in? What do I do? But they're starting to see the markets come back up. So I'm one of my worries right now, Chris, is that people are going to fall into this trap and think, hey, we hit the bottom, things are coming back up, and they're going to go back all in on stuff. And then this is just going to be when the bottom really falls out. So what kind of advice would you have for people that are kind of going through this emotional roller coaster with their 401k money right now?
Yeah, it's easy. And I'm going to come over here to TikTok. Fahim is getting really upset with me because you were talking and she wanted me to interrupt you to tell her what we're teaching. We're teaching you how to save your ass in this next recession. That's what we're doing. We're telling you what's going on, Fahim. We're telling you what's coming, the storm, the recession, maybe the Great Depression all over again. And then we're teaching you different things you can do to get ready for that. I'm sorry that I wasn't immediately attentive to just you when there's 5,000 people watching this, but hey, now I'm going to give you all the credit and I'm going to put you in the spotlight because you are just the most impatient son of a bitch I've ever seen on here. TikTok is on fire today. It's freaking awesome. I love it. So what are we teaching? We're going to teach you the different things you can do. So Stephen just brought up 401ks. What are we going to do? Well, it's different. I can't give specific advice for any one person because everybody has different needs and goals. But if you got a 401k, here's the things I would tell you probably should do. Number one, in a 401k, you're giving up your best dollars, today's dollars, and you're putting them away for a future goal, retirement. How long is retirement? 5, 10, 15, 20 years? So you're giving up control of that money for that period of time. And why are you doing that? Anticipation and hope of gains. Okay. Maybe you'll see gains, but you're going to see losses before you see gains. Okay. So arguably, I would say if you're putting money in a 401k, you're going to be buying low. Not a bad thing to do. Dollar cost average and buy low. But how much money are you putting into your 401k? Are you maxing it out? Are you putting in more than the match? Because if you're putting in more than the match, I'd have to question why. Why are you putting in money that's the most valuable dollars today into your 401k above and beyond your match? You're probably doing it because you're getting a tax deduction, right? You're putting the money in pre-tax, so you don't have to pay tax on that. Well, are your tax rates going to be lower or higher in the future? They're going to be higher. So you're putting in dollars today to get a tax deduction today at the lowest tax rate you'll ever be at, to take them out in the future when you retire at a higher tax rate. So let's just look at how money works. You gave up your most valuable dollars today, and you gave up control of them to an institution that doesn't even give you very good options. Number two, you're going to take that money back and you're going to pay a higher tax rate when you take that money out for your fictitious dreams of retirement and sailing off into the sunset. And I hope you do that, but most people don't. And number three, you missed out on all the opportunities that would have happened, that if you had that money in your possession, if you were liquid and able to deploy that money, you could have taken advantage of all the way up until that retirement. So in other words, if Uber back pre-2000 or right after 2008 knocked on your door and said, hey, I'd love to have you as a partner in this company that's going to disrupt taxis. Would you like to invest $100,000 in Uber? It's just an idea. It might not work, but if your money was all locked up in a 401k, you couldn't take advantage of that opportunity. How many opportunities do you miss because you're not in control of your money? How many opportunities do you miss because you made bad decisions with your money? You gave up control to somebody else. These are the questions you need to be asking yourself, because what they want you to think about money is the complete opposite of what you actually should be doing with your money. And it's the complete opposite. What you do with money is the opposite of what the wealthy do. The wealthy are in full control of their money. The wealthy make decisions with money that makes that money go to work for them today, but they still are in control of it. And this is the difficult part, because a lot of people are thinking, well, what is that? Well, it's very easy. You can be in control of your money. So 401ks, what should you be doing right now? If it was me, okay, and I'm younger, I'm 44, I'd be looking for my exit. I'd be looking to take my risky assets off the table. I would take whatever gains I have. Some of you still have gains in your 401k. I mean, it was the longest bull run in history. Anything you got to gain in, I'd get out of it. I would take those gains, get out, and I would reposition those assets in something very safe that enables you to not lose money when this thing lets loose, but enables you to then buy back into the market as it continues to go down. You'll never get the top, you'll never get the bottom, but you can dollar cost average in. And then with new dollars you're putting in, put your new dollars, not more than the match, into those risky assets, the S&P 500, the NASDAQ, anything, I don't know, whatever your 401k has, because those are the asset classes that are going down. You want to buy them as they go down, but you don't want to ride them down. Does that make sense? So you want to buy assets when they're going down. You want to buy those mutual funds as they go down in value, but you don't want to hold them and play the long game as they go down, because then you're going to be dealing with the drawdown effect. So if you were to lose 50% and a lot of people are like, oh, it's not going to go down 50%. You are wrong. I could show you on a chart every day where we're going to go. And I did the math for a client the other day. It's probably going to be another 40 to 60% fall from where we're at right now. You don't think that's real? Well, you don't even need to think it's real. Just look at the chart. Support and resistance lines show it all day long. Every economist knows this except for you, because you're ignorant. First off, sometimes for people like Fahim, okay, you're ignorant and you just don't want to learn. And if you don't want to learn, why are you even on here? Go somewhere else. That's what I always tell people. It's like we want to help people that want to be helped. Not everybody can be helped. But that's what I would say, Stephen. And the other thing too, I mean, obviously right now, if your goal, here's the thing, if your goal is to beat inflation, how do you beat inflation? Well, there's a really easy way. See, the federal or the government issues treasury bonds, and they also just came out with an auction in May for TIPS, Treasury Inflation Protected Securities, I-bonds. I-bonds are paying 9.62%. Inflation's 9.1. I-bonds are paying 9.62. You want to beat inflation? Buy I-bonds. You can only buy $10,000 of them. And you can do that by going to treasurydirect.gov. And I got some good news for some of you that don't want us to make any money. The government doesn't pay us anything. So I just gave you some free advice, and it's damn good advice. You should load up on T or I-bonds and TIPS as much as you can. 10,000 for you, 10,000 for your wife, 10,000 for your child, 10,000 for your business. You can get at least 50, 60 grand in there if you've got some entities and some people in your family. Why wouldn't you at 9.62%? And guaranteed by the full faith and credit of the U.S. government. So unless you hate the U.S. and you think there is no faith at all in the U.S. government, then I would just say, hey, the northern neighbors up here, Canada, would be happy to have you. So pack your shit and move up north. Or pack your shit and why don't you move somewhere else? Ukraine's fighting their freedom for their freedom right now. We're not. Okay. So why don't you put yourself in their shoes? That's all I have to say with that. Russell's right. Russell Houston over here on he's coming in from Facebook. He said, he's saying a lot of really good stuff. Get rid of consumer debt. So you want some good advice? Get rid of consumer debt. That's some great advice. Invest in hard assets. Look for hard assets. That's another great piece of advice that are collateralized and secured. If you don't want to own the real estate because it's a pain in the butt and tenants, and termites and toilets, you don't want to deal with that, become the bank. The ultimate in real estate really is being the bank. So lend your money out, just like Russell's saying. And Russell's had a lot of really, really, really good comments that he said in here. All right. So yeah, hopefully that gives you a couple tangible things. So folks, we're not here to teach you. We're here. What the F happened is here to talk about the things that happened in the news. And we drop a couple bombs and give you some ideas and some things that you can do tactically, or I think I'm saying that right, but things you can do right now to change things. But the choice is really on you. This is really just to entertain you. You want to learn? Come this afternoon to the Wealth webinar. It's free. So for my Matthew Veritas, I think was his name, who doesn't want us to make any money, good, it's free. You got to pay nothing. You just go to chrisnaugle.com. You register for the Wealth webinar. It's an hour and a half training, all learning, no fluff. So join us for that. What else we got, Stephen?
Yeah, I saw this was kind of interesting. It made me start thinking, people are really looking for a place to put money right now. And I feel like they might be getting a little desperate. I saw this, right? Netflix earnings weren't great, but they were good enough for investors. And then if you look at, Netflix stock, it was up something like 10% yesterday. So people are, not even great earnings, like nothing impressive or anything. Netflix lost nearly 1 million subscribers in the quarter after forecasting a dip of 2 million. So they lost 1 million less than they were expecting, but still lost 1 million users. And this somehow equates to good news for their stocks and for investors. So to me, that's saying, hey, there's not a lot of good places to park and put money right now as an investor. So let's just gamble and hope that this one's better than everything else. But to me, there's so many better ways to put money. You mentioned one of them a minute ago with real estate. And if you don't want to actively be involved with real estate, whether that's, doing flips or whether that's owning rental properties or apartment complexes, well, what about passive real estate through private money lending, through notes? And this is the kind of things that you aren't going to find from a traditional financial advisor, from CNBC, from the talking heads on TV. But these are the things that the wealthy do. These are the things that the rich do, people that understand money do. So when you just mentioned, join us at 1:00 today for the Wealth webinar series, that's exactly what we're going to be talking about today, is how you can take the news that you're learning right now this morning and seeing in the headlines and not have to invest in stuff that might not be great, but it's better than the other shitty stuff around it. You can invest in smart things that are going to provide you consistent, predictable income. And that's what Money School is all about. I just thought that was
portfolio ideas. Yeah. And I'm just going to piggyback portfolio ideas. You said, and he said, private lending is the best. And he's absolutely right. Being the bank is always the best. That's why bank lucrative business in the world. All of you are wealthy, just like me, just like Stephen. If you want to get wealthy, find out who the wealthiest individuals are. Find out what the wealthiest institutions are and mimic what they do. Banks are a great place to start. Come on. Banks have literally convinced us all to make deposits in their institution, pay us next to nothing, and then turn around and be fully in control of our money that we work for. Then they make that money go to work for them. We work for that money, but yet we gave up control to the bank, and the bank makes that money go to work for them in loans. And that's what they do. They lend money. That if you don't know how banks make money, that's how they do it. And when they lend money, they make a spread. They pay you 0.001 or 0.002 if you're a premier banking member, and then they lend it out right now. What's the best car loan rate right now? I guess if you're an 800 credit score, maybe you're going to get a 5. Okay. But most car loans, I just looked the other day, are like 6. So they make 6.
Got one at 2.9.
2.9 is what?
Well, we actually just got one at 2.9, believe it or not. But yeah.
Yeah, that's phenomenal. But there's somebody eating that spread because they're making profit on it. So there's all sorts of things. But that's about what it is. But all I'm saying, it doesn't matter if it's 3.9, 2.9, or 5. What is that spread? That spread is the banks have figured out how to convince you to give your money to them, and then they turn around and make a spread which works out to be 400 to 1,300% more than you. Look it up, BauerFinancial.com. If you want the facts, there's the facts. That'll tell you how much banks make. Any bank, anywhere, anytime, they make 400 to 1,300% more than you. So you want to do the same thing? Mimic what they do. Mimic what the wealthy do. Do you know what the wealthy don't do? The things that your financial advisors tell you to do. You know how I know this? I spent 16 years as a financial advisor. Everything I was telling my clients to do, for the most part, my wealthiest clients that I know now don't do any of that. The wealthiest clients are lending. They're being the bank. They're in full control of their money. They don't keep large sums of money in banks because they understand what I just told you. They keep money in their own bank, where they make a guaranteed interest rate that is at least 3 times what you're making in a traditional bank. And then they have full control to use that money without interrupting their interest. Like, folks, this is what we teach. And for TikTok, who, we got all the haters on today, they came out of the woodwork. Thank you all for joining us. But if you want to learn how to do this, just go to the bio and watch the video. There's a video link in my bio on TikTok. Just go in there and watch the video. And after you watch the video, if you have questions, just schedule a call with us. It's simple. We'll answer all your questions for you. But that's what wealthy do. Okay. Somebody just asked, what's the best place to buy stocks? I don't know Charles Schwab is good. TD Ameritrade's good. I've had accounts with both them, but I'm not buying any stocks right now. I've sold all my stocks. I'm buying treasury bonds, but most people wouldn't understand the inverse relationship between interest rates and markets and interest rates and bond prices. But if you did, you'd be buying treasury bonds too. You'd be doing why do insurance companies buy treasury bonds? But nobody ever asks these questions. They just say, oh, this person told me to buy this. Why did they tell you to buy that? Probably because they're making money telling you to buy that. Everything I just told you to buy today, everything I told you to do makes us zero money. Doing this show makes us zero money. Sure, maybe it gets some of you to, gives you some advice that you can act on, and it works for you and it helps, just like many people. Just like, we got Trevor here, we got Russell here. I'm just looking through. We had some people on Instagram coming in that they're so excited to get their bank started. So it's helping a lot of people, and that's why we do this show. Nobody's paying us for this show. Did you see us doing advertisements on this show? No banners going up. We're not sitting there saying, oh, and this What the F Happens episode was brought to you by Bank of America. Absolutely not. We just do this because we love doing this and we love teaching it. And I actually love the haters, because the haters become the next lovers. And I know they don't get that, but that's okay. So Carol Anderson, she's asking about what insurance am I talking about? Again, watch the video in my bio, but we're talking about specifically and only specially designed and engineered whole life. Spit it out, Chris. Specially designed and engineered whole life. Notice I didn't just say whole life, because I'm not talking about the whole life you buy from your broke ass brother-in-law. And I'm not talking about the whole life you buy from the insurance store or your financial advisor. I'm talking about taking a whole life contract from a specific insurance company, giant mutually owned insurance company that pays dividends, and reconstructing it so it looks and functions more like a bank account, more so than it does an insurance policy. But you get all the benefits of an insurance policy. Your money's in a tax-free environment, okay? Tax-advantaged environment. It grows tax-deferred, and if you do it properly and it's not a mech, it will be tax-free, the internal buildup. Number 2, it's the only place where you can get the guaranteed interest rate that insurance companies can pay that nobody else can. Number 3, it's the only place you can put your money in, use your money without interrupting the interest and dividends you get paid. In other words, you can put money in, take that money out as a loan, and not lose any interruption of the money you're making. But yet you got the money in your hand, and then you send that money out to work. Maybe you become the bank and you start doing private lending with Private Money Club. Hey, the world's yours. Like, when you're in control of your money, it doesn't matter what you do. You can do it all. It's a beautiful thing. Somebody's asking, where do you buy treasury bonds? The same place you'd buy tips. And I'm going to come back to Lisa Menconi. We love Lisa. She's been around the campfire for a while. She probably went to treasurydirect.gov. So on TikTok, treasurydirect.gov. It's a government website. And that's where you can buy treasury bonds, or you can buy the tips, the new auction for tips. You can buy them there. And Lisa was asking which one to buy. She said the 5 or the 10, but I would probably, if you're buying tips, there's a 4-year and a 10-year. I'd probably buy the 4. That's the one I bought. You can buy the 10. It doesn't matter because they're liquid. With treasury bonds, there's 2-year, there's 10-year, there's 30-year. You want the longest duration, because the longest duration bonds doesn't mean you need to hold it for 10 or 30 years, because they're liquid. They're the most liquid security you'll ever buy, because everybody wants them. So a treasury bond, if you buy a 30-year, it's going to have the biggest impact to interest rate fluctuations. In other words, when rates go up, the price goes down the most in a 30-year. A 2-year has very little impact on price when rates go up or down, but a 30-year has big movements because you're 30 years out till maturity. But we're not playing a 30-year game. We're not even playing a 10-year game. I might be playing a 2-year game. So I'm buying a 30-year bond with the anticipation of probably selling all of my treasuries inside the next 2 years when the markets crash and the Fed drops interest rates yet again, because they're raising interest rates now, but eventually they'll drop them again. And when they do, your treasury bonds will go up. So that's how you do that. How much does it cost to buy treasury bonds? There is no cost. The government doesn't charge a fee to buy treasury bonds. You just go to their website and you just buy them. If you don't want to buy the actual bond, you can go to your TD Ameritrade, your Schwab, whatever brokerage you're with, and you can buy ETFs. So exchange traded funds that hold treasury bonds, the two that I buy, not making a recommendation or a suggestion, not giving financial advice, just telling you what I buy. TLT, okay, it's an ETF that holds 20 plus year duration bonds. So that's one that I bulked up on. And then ZROZ, so ZROZ, again, not making a suggestion, these are just what I buy, is a 30-year zero coupon bond, which is going to have the biggest swing in price when rates go up or down because it's zero coupon. You get paid no interest. Okay, TLT or 30 or 10 or 2-year bonds all pay an interest rate. Zero coupon bonds do not. You're playing it simply for price fluctuation, which is the game you should be playing with them. Because if any of you are excited about making 2.2%, we need to adjust your expectations of returns. So why didn't somebody, Stephen, this is a good one. Someone said, why didn't you learn this in school? Because they don't want you to know this. What we teach definitely disrupts banks. Banks want your deposits. We're teaching you how to be your own bank. So of course they're not going to teach this. They don't teach any financial literacy in banks. It's been a problem for, the better part of this entire century. Anyway. Oh God,
they don't hide it. They give you the lollipops at the counter when you visit the bank. And what do those lollipops say on them?
Dum-dums. Dum-dums. Absolutely. Ocean 88. What's that, Stephen?
No, yeah, let's definitely get into a little real estate talk, and we can lead off with what Ocean 888 says here. And actually, I would like to hear your opinion because we don't talk a lot about tax liens. But so Ocean 888 said, Chris, aren't tax liens a good bet since they're government-backed, 12 to 35% return, and if default, you get the property free and clear for only the taxes owed?
Yeah. So my take on tax liens is they are very good. Same thing with notes. Like at the event we have next weekend here in Buffalo, Kevin Shortell is going to come out and talk about notes. You own no real estate in tax liens or notes, but you get paid. So the only problem with tax liens are time, right? You lock the money up in the tax lien. And if something goes bad, yes, it's going to take a lot of time to foreclose and take the property. Same thing with notes, but that's why you got to do your due diligence. You got to really, really look at the deal or the tax lien and decide whether it fits your risk return profile or it doesn't. So I like them. What do you think of tax liens, Stephen?
Yeah, they can be good. The problem that I've found is there's a lot of competition in tax liens, especially because the majority of tax lien auctions are now held and tax lien sales are now held online. It allows a lot of people to become part of it. And hedge funds and banks and big financial institutions, they are aware of tax funds as well. So a lot of times they'll go in and they'll make bids on these tax liens. So yeah, a state might offer, 18% or 22% on the tax lien, but that's where it starts. And then the bidding begins. And then those things get bid down and down and down and down. And again, a hedge fund or a bank can make money earning 2 or 3%, where we as an individual want that 12, 15, 18% returns. So you get that competition factor in there. And if you do find a good deal, or let's say you're in a state where you're going for the deed of the property, you're not really worried about the returns. You'd rather actually get that property, get the deed free and clear, like you're saying. The problem with that a lot of times is they make you bid on these things sight unseen. So a lot of times you don't know what you're actually bidding on, and buying real estate, not knowing what you're bidding on, can be a scary venture. And then a lot of times there can be other liens and encumbrances on the properties. So there's a lot of risk in doing it. So if you're very, very educated and you're willing to spend the time to go out there and go to tons of different auctions and go online and really follow it, yeah, there's absolutely money to be made there. I've made money in tax liens in the past personally. So absolutely. I bought them here in Florida several times actually in the past, but not recently. And that's what I was running into myself, but just a little bit on tax liens there.
I love it. Listen, like I say this all the time. Real estate's the greatest investment on earth. You know, it has the most options, the most exits, and it's a tangible asset. So it can't be taken from you. It can be taken from you, but it's tangible. You can kick it. You can, scream at it. You can do whatever you want. You can even punch it and it'll skin your knuckles. But the problem with real estate is there isn't just one way to buy real estate. There's lots of strategies. You just got to pick the right strategy for the time, for the environment that you're buying it in. Like right now, the wrong strategy is flipping. Okay, unless you're very experienced and you know what you're doing, you're wholesaling in and out very quick, the market is going to be working against you with flipping. So I flip right now. Okay, I've got a couple. Me and my wife have done hundreds of flips. We have a couple right now that we're getting done and on the market. One will be on next week. One that Aaron over here Aaron's coming in from YouTube. He's one of the lenders on it actually. So he was the bank on our deal, and that deal closes next week. So he'll get his money back, and then he'll have to redeploy and make his money go to work again. And maybe he's going to buy some treasury bonds. I don't know when the auction not treasuries, tips. I don't know when the auction for tips ends, but it could be soon. But the other thing that's cool about real estate is you don't actually have to own real estate to make money in real estate. There are so many ways that I've learned over the last decade to invest in real estate where you really don't even need to own it. You can partner in with an operator. Okay. You could be a note holder. So find someone like Kevin Shortell, who's one of my favorite in that space. And, they basically, originate notes and then sell pieces of them or help you buy your own notes. That's a great business. And if you get very good at it, and Maureen's not on here today, but we've got a very close client of ours who just recently got into notes, and she is absolutely crushing it, but she put the time in to learn it.
And Chris, Kevin is actually going to join us for about 10 minutes today at 1:00 too. So if you want to learn real briefly a little more about notes, definitely join us at 1:00 Eastern for the Wealth webinar today.
Absolutely. Yeah. So again, just so you all know, as we kind of wrap into the final couple of minutes of today's What the F Happened, this isn't the only show. We do 7 shows every week. So TikTok, we do 7 shows every single week. None of them cost you any money. The best one, I think, is Wealth Webinar, which we do every Wednesday at 1 p.m. Eastern. Okay, and today is going to be a really good one. It's the ramp up for the event next week. We've got our speakers coming on. I think we got Justin Colby coming on, Kevin Shortell coming on. Who else we got? We got our tax planning guy coming on. So we got a whole bunch of great speakers coming on, just giving a highlight of what they're going to be doing and giving you some golden nuggets. So that's going to be phenomenal. Where is the 1 p.m. call? Great question. Portfolio. The way you sign up for it is you just go to chrisnaugle.com, Naugle. So just write that down, chrisnaugle.com, and just scroll with the index finger and you'll see it. It says Wealth Webinar. You click it, you register, and then we send you a Zoom link, and that's how you do it. It's different than StreamYard because that one is a registered event, but there's no cost. We even give you a book for registering for it, a book on how to get all the money back for your cars that you buy, drive, and own. So that's it. And one of the best questions came in, Stephen. I've never been asked this before. They said, what music do you listen to de-stress? So obviously they can tell I get stressed out. Lately it's been Beatles, specifically John Lennon's Imagine. So if I'm really stressed out and I put on John Lennon's Imagine, I'm instantly de-stressed. And another, songwriter and poet that I love, an artist, is Bob Dylan. I listen to a lot of Bob Dylan, and my favorite Bob Dylan song is Times Are Changing, because times are changing right now.
I'm just going to show you.
What do you listen to?
Keep going.
Steven, what do you listen to?
I listen to a lot of different music. If spend a lot of time on my boat and on my golf cart and at the beach and hanging out down here in South Florida. So we play a lot of like Cali reggae, like Dirty Heads and music like that. So big fans of that. But I'm not scared. We were up driving around the mountains in North Carolina and Tennessee a couple weeks ago, blasting country music. So I got now I'm not a huge fan of country typically, but I'll listen to it in the right setting. But I do love classic rock. I love anything older like that. If I'm doing some drinking, I'll put on some Elton John or Eric Clapton or Beatles, John Lennon, like you're saying. My wife knows I'm doing a little drinking when Queen comes on, starts playing on the radio. So that's a little bit with me and music. So, but it's funny you say that. Too. Go ahead and talk. I'll show you these while we're talking. But
all right.
I wanted to two guys. So I got my boy John Lennon. People.
Look at that.
Let me just open this up just so you can see. It's just funny because as you know, I've been redoing my office, so I got all these down. But I got my People for Peace, so love John Lennon too. And then I got I got one more for you. Here's my boy Bob Dylan. This was from a concert I was at Pittsburgh,
we didn't
Pennsylvania.
rehearse this, folks.
2010, Pittsburgh, Pennsylvania. Bob Dylan I saw. So anyway, it's just funny you mentioned those two names. They were sitting right there.
Yeah, totally unrehearsed. I didn't know he was into those bands, to be quite honest with you. So, like, those are just the two that, Beatles are definitely my favorite. But anyway, we're not here to talk about
Yes,
music.
Aaron, of course, Prince.
That was pretty funny. So two things on the be your own bank, on the privatized banking and the infinite banking concept. So over here on YouTube, we got Nancy. She's saying, I'm 71. Can I still buy an insurance policy? If so, would I be able to use and borrow from that? Yes, Nancy. So we have a client. She's 74. Now, although your policy design isn't going to be as lucrative as mine, Stephen's, or somebody else that's maybe younger, it works very well. And you will still have access to your money immediately in the first 30 days. It just might be a little bit lower percentage than some of the other clients that we're able to design them for, just because of your age. The cost of insurance is a little higher, but yeah, Nancy, we definitely build them, and you're not too old. Now, the problem as you get up in age, like my mother just had open heart surgery. There's not going to be, and my mom's 66 years old, there's not going to be another day she's going to be able to buy insurance. Like, her insurance or her insurability window is closed, at least for the next probably 5 years minimum. So you have to look as good on the inside as you do on the outside, because there is underwriting. So if you can't qualify yourself because of medical conditions, what you'd want to do is you can still be the owner of a policy, but you'd have to find a borrowed life. You'd have to find like a child, or, maybe you own a business, and in that business you have executives, just like banks do with their vice presidents. You can do that. And a lot of people, Stephen, are always asking us, what does it cost to set up my own bank? It doesn't cost you anything except for the check you deposit into your bank. That's it. So your premium deposit is a deposit. It's not a cost, it's a deposit. So I don't think anyone ever walks into the bank and makes a deposit and says, boy, that was expensive. They're like, it's a deposit. Well, when we build these policies, these specially designed and engineered whole lives, the premiums are your deposits. They're premium deposits. So when you put that money in, you can't think of it as a cost. There is a cost of insurance, and each insurance company charges a policy service fee. So if we really got down to it, you'll never pay us to set your bank up. We get paid by the insurance. It's like crap, but that's how we get paid. We just do it for, we're over 5,000 clients now. So how it actually works is the insurance companies charge a fee of usually about $50 to $100 a year. That's the policy service fee. It just depends on the carrier, but they're all $50 to $100 a year. And then there's a cost for the insurance. But the way we design them, folks, is we put the lowest death benefit on. So under IRS rules, we put the lowest death benefit for the highest cash deposit. Okay. The reason for that is that's how it looks more like a banking. And in doing that, if you know anything about insurance, the lower the death benefit, the lower the commission. So because we're putting the lowest death benefit on, we're reducing our commissions up to 90%. And that's why you have access to 90% more money than you would with a regular whole life. That's the name of the game. I've got lots of YouTube videos that talk about exactly that. We've been doing some really cool YouTube videos lately of literally, and some people are getting mad at me for this, but we're sort of peeling the curtain people the things that happen behind the scenes that a lot of other agents and other financial advisors don't want people to know. It's like the secret sauce. Well, we're an open book. Like, it's best that you know how this works. It's best that you know why it works. And so what that we give the secrets away? Go mindset versus scarcity mindset. Most financial industry people are scarcity mindset because they're commission based. They don't want to give any commissions up. So that scarcity kicks in. But, the biggest thing, folks, and I love this, Portfolio Ideas booked a call with us for Friday. So we'll have to see who he's going to be speaking, he or she, because I don't know, is going to be speaking with, but we're very excited about that. Where is the 1 p.m. call? chrisnaugle.com. You can register for the Wealth Web. And Ask Me Anything happy hour at 4:30, where we actually do have a cocktail. Usually I have a beer, and we answer all your questions. So folks, all that stuff, YouTube and Facebook, Stephen just posted it. That's how you can book a call, and that's how you can do that. Over here on TikTok and Instagram, because we can't post on these StreamYards, just go to chrisnaugle.com and register. And folks, we are out of time, unfortunately.
All right on cue. I think Chris froze. You guys see Chris? Is he froze? Well, looks like we're done for the day. Maybe I'm frozen. Can you guys hear me? Can you hear Chris? Where are we at? All right. Looks like Chris froze right at the end of the show. So perfect.